people would start feeling better because they would know that they're going to keep most of their discretionary income after tax would be able to be spent back into this economy. It would help everyone alike. We could hit a bottom eventually with workarounds in the housing subprime. There's lots of things that could be done. It wouldn't be the easiest road, but it would still be a road for you to make money and for what would be the positive catalyst that would help the dying American public. And they're dying right now out here. So we have low inflation still. We have overnight money rates, which is what Bernanke does. But then in the what they did was they gave the money to the banks in your TARP fund and then let them take at 0% interest on the money. Then they went out and did do some lending with it, made 3%, 5%, and that helped the big banks get out of their problem. You're not out of your problem as a consumer and a person of this, or an individual of this society. So what I am saying is that we could go much higher on the Dow. We could take out the last highs just on the simple fact that they say that they're going to extend that tax thing because from the federal side of the government. Now remember, each state and union still has their problems, and we still have systemic risk in each state by the union. However, there is a way where the money supply with consumers could be recirculated back into the economy, which would be wonderful for small businesses and corporate of America in general. It would bring back the workforce because it would force the public corporations to start adding new headcount, meaning that they got to come back. When they did all their cost cutting and the unemployment rate went way high, is that public corporations in America have to have a reason to hire more people to get the shelf off the product, to get the manufacturing, the productivity, all of that going. Another thing, that the yield curve is not going steeply down, but it's kind of flattened out for what it is as an economic indicator. And everything has worked currently up to the systemic low of the Dow over here. That low in the Dow was right around, let's say 66, 65, 6600 here, and we went all the way from there, that's on the video here, went all the way up to 11,000, had a great rally. But the problem is it's all at jeopardy, and we've had a nice correction because of all of this stuff that I'm talking about. Now, what could happen here on the Dow and the S&P and the other indexes and the stock market in general is that the public has been beaten down so bad that they have walked away. They would be forced to return to the market, because if they're not getting no yield at all in a money market fund, eventually with all of this kind of good news that could happen, would bring that money. There's about $3 trillion, $4 trillion, believe it or not, that is sitting around doing nothing that could find its way back to the stock market. And the American public dream of investing and offsetting their income through certain kinds of investments and making money for their retirements and things like that. Yes, the stock market's forever changed. And I'm not condoning the bad behavior that investors do, because they do it. I'm not condoning that behavior. What I will give you a stamp, if you do things right and you stick with stockmarketfunding.com long enough, you're going to have a great outcome. Basically, I'm back on the tape here at stockmarketfunding.com. I've got a weekly chart on the Dow. And basically, as I said, why could we go to Dow 14,000, which is up here at that upper trend line? And first you have a pit stop to clear at 12,000. And why could the Dow take out the previous high? Lots of reasons why. Number one, everyone's excited over the earnings season, which has peaked. We told people that it has peaked. However, it could still chug along going forward if they do the right tax cuts and they get rid of all the systemic risk to those tax increases, to tax cuts, to prosperity in America. And just the talk with the election coming up could spark a huge rally. I will be watching the bond yields and the bond market and the yield curve very, very intently. And basically on this Dow weekly chart, you had buyers come in at this double bottom right here. You are no longer, it's trying to get back above a declining 10-week moving average. It's back above the 50-week. It still remains that 10,500 on the Dow, like we told people, is the major catalyst of resistance. Now, back up here where the green line is a little above 11,000 of the 200-week moving average. One of two things are going to happen. Is that if there is an announcement and they start to get what would be good for you in America and what would help the American economy in its true capacity level, what would help each citizen such as yourself, you're deleveraged enough, your whole personal banking system to you as a human being has been totally shattered. Look at the stock market's still a great place to make money, irrespectively. And you make money on the downside, you make money on the upside, but you need to know that all of the worries mounting massive financial overhaul will hurt jobs. What won't hurt jobs, forget about that part, what would bring jobs back in would be the incentives for corporate of America in the U.S. to start hiring because they're forced to hire. Number one, the money that's on the sidelines, about $3 trillion, and all the money in money market funds that would get a negative yield, would have to put their money back in the market. And we'll see if that happens. I just want people to know that, yes, there's a Dow 5,000, but there's also a Dow 14,000. And I didn't say 14,000 in the next week. I'm not saying that. What I am saying, though, that 2011 doesn't have to be another big down year, but it's yet to be determined. I'm just letting you know that where the game changer can change within our financial regulatory system, our lending system, because they got to lend. They're going to have to lend that money, and they're going to have to lend it back to you to run your business. And so therefore there is a glimmer of hope. I don't know that you should count on it till it happens, but I'm just giving you the story. And part of what was on this tape is going to be a double tape because we were doing our radio show at the same time that we were doing here. I'm going to conclude the weekly tape here, and it's a little bit different today than me just doing it because I had two different shows going on. One is a video, the other was our live talk show, which you can go to stockmarketfunding.com, click on Stock Talk Radio Show, and join us on Saturday mornings and any other time that we give these special events. So it's a very special event. I also hope and pray for the American public that they get what they deserve. And they've been already shoveled. The dirt has already been on top of you. So picture yourself being in a 6-foot hole and the dirt's about up to your neck. And you can still breathe out of your mouth and your nose. And we don't want to see that dirt go over the top where we all stop breathing in this economy. And that there is a very small percentage of hope, but not a lot. But we're here to tell you what that would be. And the thing about it is, once again, it's been a gift. We're going to be hoping for everyone. And so this Dow weekly chart isn't in our normal format. We're getting above some key areas. Light volume move, earnings season week here. Short cover here. So just the talk of these things could turn this market around. The 10-week moving average has to flatten out. You have to have 4 weeks closing above the 10-week to say that you've gone from a bear trend back to a bull trend setup within this index.